It always happens in special times. Tata Consumer Products in the company of high price earning multiples. 14th January 2022 was a D-Day for Tata Consumer Products because the price crossed across three moving averages in a single day with massive volumes, and the company believed that it is a one-way journey towards 800 as a textbook case. But what happened on the subsequent 3 days was an eye-opener, as with moderate volumes the price crashed day after day and the company found itself in the deep bearish zone. Honestly, the beginning of this fall started long back on 15th September 21, and that is where one has to pick the threads to find out what led to where the company finds today. In fact, a close look at the share price movement for the last 18 months throws up very clearly that the peak was achieved at the end of August, 865, and almost 147 rupees was lost in the next 5 months leading up to January, and this fall must be having some strong reasons behind it, and that is the subject matter of this presentation. I am Vittal Prabhu, bringing you the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. Tata Consumer Products, second largest manufacturer and distributor of tea in the world. Its subsidiary Tata Coffee has plantations of coffee, has got a JV with Starbucks, manufactures Himalayan natural mineral water and other beverages. Tata Salt and Tata Sampann are the two additions to its portfolio from Tata Chemicals. The company has global operations focused on UK, US and Canada. Its strategic move was acquisition of the Tetley tea brand in UK. Its total profits get about 28% from international business. A company with a great reputation and stands out for its professional management of business affairs. What is positive about the company is its constant evolving and reorienting based on the focus of the group. Taking Tata Sampann and Tata Salt and adding to its volume growth has been a wise decision. Now the focus on rural presence with better distribution. But in FMCG, the company is almost 25% of the two biggest players, HUL and ITC, and has got a long way to go. The shareholding pattern of the company is a picture of trust and confidence in the Tata Group, which continues to hold 34.7%, and there has been an increase in the holding of FIIs to 25.9%. The cash flow of Tata Consumer Products is quite strong and sound, with the normal working capital changes, adequate surplus, minimal borrowings, and one thing that stands out in the entire cash flow is gradually growing dividend year on year. The latest incremental effect is because of the additional capital issued in favor of Tata Chemicals on the acquisition of the two brands, Tata Sampann and Tata Salt. Operational results play upon the market sentiments. India Beverage division, which previous year had 571 crores as its EBITDA, lost 120 crores and came down to 450 crores between September 20 and September 21. Mainly because of the fall in the EBITDA margin percentage from 15 to 9, and we observe even the overall performance, there was a fall of almost 60 crores, and this fall in the EBITDA and this poor performance of India Beverage section must have got the attention of the market in making the market sentiments. Market will eagerly await the December quarterly results to form an opinion on change in fortunes of the company for sure. The overall financial performance in terms of profit after tax and earnings before depreciation, interest and tax also reflected similar sentiments. Taking the 12 months periods of September 19, where it was at a near normal, The two parameters moved slightly up by September 20, 10% PAT and then EBITDA 15.4%. But the subsequent 4 quarters with the normal increase in revenue did not improve the indices of profitability. PAT came down by almost 1% and substantial drop in the EBITDA percentage. And this is a matter of concern which gets reflected in the market movements. Tata Consumer Products bought Tata Sampann and Tata Salt from Tata Chemicals. It paid 6,000 crores worth equity and net worth moved to 11,000 crores. But there was no corresponding increase in the profits. And as a result, the return on capital employed just fell down from 17.9% to 7.4%. The exercise to segregate the total capital into operating capital and capital towards goodwill doesn't cut much ice with an external investor who wants a return on capital employed. Plain and simple, return on capital employed of Tata Consumer Products is quite dismal and low. Company's share price has become vulnerable for the simple reason the market capitalization, which is currently there at around 68,000 crores, cannot be sustained based on the current profitability of the company. A PE multiple of above 80 adds volatility to the share price movement, and that is what happened when the share price further went up and the collapse ensued. While the poor profitability has hurt the company's share market valuations, the 5-year compounded annual growth rate further reflects on the same. Be it net worth, total assets, profit after tax or revenue, the CAGR has been bordering around 20% plus, while market capitalization, the compounded annual growth rate has been an astounding 50%, which is carrying an inherent risk of volatility and possible fall in price if there is no improvement substantial in the operational results in the ensuing quarters. Price action data throws up a cautious situation. Average price has fallen from 764 to 719, while the quantity traded has moved from 17 lakhs to 24 lakhs. When the price falls and the quantity moves up, it suggests something which we have to read in terms of speculative element being there when delivery percentage is falling. But the consolation is the number of players in the market going by the average size of the order suggests more people being involved. It zeroes down to what happens when the quantity keeps moving up. Thumb rule says quantity up, trend continues, and the current trend is downwards, bearish and below all moving averages. With these perspectives in the background, what becomes very clear is the candle positioning as of today is banking on the 50% Fibonacci level of 722. Any risk of downward movement is likely to lead to a long bearish trend unless the quarterly performance throws up some pleasant surprises and the company is back into normal. Hope this video on Tata Consumer Products came up to your expectations. You can access similar informative and rich content oriented videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your time, support and interest. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional.